Well, the confidence actually was strengthened last year. Now, last year was was a terrible year for everything crypto. But if you think about what happened, it was the centralized, opaque players who went bankrupt: FTX, Celsius, 3 Hours Capital, and what did we see from Bitcoin? Bitcoin is completely decentralized and transparent. It started because of 0809, the lack of transparency in the traditional financial services ecosystem.
Hey guys, welcome back to Library of Wealth. Today we have the CEO of ARK Invest, Cathie Wood, sharing her insights on the recent market conditions and how Bitcoin will play a major role in the coming months. Cathie also talks about the concerns surrounding inflation and interest rates, refuting that they resemble those of the 1970s. Cathie notes that recent remarks by former Treasury Secretary Larry Summers, along with the current Treasury Secretary Janet Yellen and Fed Chairman Jerome Powell, have indicated a shift in views from fears of 70s-style inflation to concerns of low inflation and low growth. She believes these changes in perception have had a recent impact on the market. Let's get right into the latest interview with Cathie Wood as she gives her market outlook for 2023 and how the transparency of Bitcoin will restore investor sentiment this year. Before we dive in, don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
No, if anything, I saw an exaggerated reaction last year to fears that inflation and interest rates were embedded in the system like they were in the 70s. And we just didn't believe that at all. In fact, we were seeing a lot of early signs of inflation coming down, actual deflation surfacing. So this does not surprise us. I think what has happened here, there are three people who have weighed in the last week who really have changed their points of view. One is Larry Summers. Larry Summers was almost apoplectic last year. So this is the former Treasury Secretary,
Right.
Almost apoplectic about inflation. And I think he truly influenced the Fed because he was so sure that we were in a 70s style inflation. If you'll notice in the last week, he said, okay, now don't signal what you're going to do in the future. We're seeing some economic weakness here. And I think the other thing he was saying, not explicitly, was, hey, some prices are coming down that I didn't expect to come down. You know, the oil price is roughly half of where it was last March. So that's the first person. The second person was Treasury Secretary Janet Yellen. And remember, I think the market last year got really upset when she changed her mind on transitory. And I think that fed Chairman Powell as well and turned him into an even more hawkish mode, along with the rest of the board members. She this week said that now that inflation is coming down, we're probably going to be looking at the bigger risk being kind of mired in low inflation, low growth. That was a big, and it effectively says, wow, maybe it was transitory after all. It was just a little longer than we expected. Who knew supply chain problems would last 2 to 3 years? Who knew Russia would invade Ukraine? And then the third thing that happened, this was really important, I think, in the Q&A, Chairman Powell himself said, I agree with Lyle Brainerd. We do not believe we're in the middle of a wage price spiral. And that's another code phrase for the 70s style inflation. So I think that is what the market's responding to. We see the deflation in the pipeline because commodity prices, which are at the top of the funnel, have been coming down on balance. Now, we're seeing right now some interruptions in that as China moves away from its zero COVID policy. But I think the fake out here is China has been building inventories, particularly of energy. It's been getting Russia's energy for a 40% discount to what the rest of us are paying. So why wouldn't it build inventories? So I think that fear has been a little overblown in terms of ramifications for inflation. And I also don't think China's taking off. But anyway, the funnel we had at holiday time, massive discounting. And even though we had massive discounting in the fourth quarter, inventory accumulation accelerated. That was the biggest surprise to me. Wait a minute, final sales were that punk, that inventories built, even though retailers and others were trying to clear the shelves with these massive discounts. That was very interesting to me. So I think underlying demand here is basically the consumer is railing against price increases because real average wages have gone down. And the consumer is going to win this battle.
Cathie sheds light on the performance of cryptocurrencies in 2020 and highlights the resilience demonstrated by decentralized and transparent systems like Bitcoin. She views Bitcoin as a rules-based digital monetary system with a capped supply and believes it to be an insurance policy against the confiscation of wealth in scenarios of hyperinflation and fiscal crises brought on by recent global events.
Well, the confidence actually was strengthened last year. Now, last year was a terrible year for everything crypto. But if you think about what happened, it was the centralized, opaque players who went bankrupt: FTX, Celsius, 3 Hours Capital. And what did we see from Bitcoin? Bitcoin is completely decentralized and transparent. It started because of 0809, the lack of transparency in the traditional financial services ecosystem. And I remember when we did our research, and Art Laffer, I mentioned him the first time he was on your show. Yep. He took us through what Bitcoin meant to him, and it was, wow, Art, this is a rules-based monetary, it's a rules-based digital monetary system, and it's global, and there's no human intervention. It's very disciplined. It's mathematically metered to top out at 21 million units. Well, in the last 3 years, the responses to COVID, the fiscal and monetary responses that, in many countries are causing hyperinflation and, fiscal crises. We're seeing protests and riots all over the place. Well, where do these people go for an insurance policy against an implosion in their purchasing power and wealth? It is in something like Bitcoin. Bitcoin is an insurance policy, and it is an insurance policy for everyone against confiscation of wealth.
Cathie is of the belief that the inflation fears are unjustified and that China's recent policy shifts are contributing to a re-emergence of deflationary trends. She cites China's accumulation of energy inventories and low energy costs is due to paying less than the rest of the world, and mentions that the acceleration of inventory accumulation in Q4 indicates strong underlying consumer demand. However, she believes that consumers are resisting price increases as real average wages decline, and the consumer will likely come out on top in 2023. What do you think about Cathie Wood's market outlook for Bitcoin, crypto, and inflation in the coming months? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.